Good morning, traders. It's 8:03 a.m. Chicago time on Thursday, the 23rd of September, 2021. This is episode number 2079. Please give me an audio check if you have a moment. Just let me know how I'm coming across. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have today? Today, again, same as yesterday, mild risk on sentiment in the market. We have a multi-distribution profile across multiple indices. The overall market position is that of a market that is absorbing the news that we got. There's the key elements here is that the real estate debt issues are calming. There are deals in place. There are payments going across, or at least promises of payments going across. In the Chinese market, Japan which was on break yesterday, is back in business. China's open, and things are back under control. So the main element that's remaining ahead, and again, I'm seeing this rally as a more of a pullback than an actual rally, is because of the remaining key issues that the market has to contend with, and that is, the funding of the U.S. government. Global growth is slowing down. It appears to be slowing down. We have earnings. We had earnings actually this morning from Rite Aid, which is a pharmacy company. Rite Aid came in a little bit better, but their EPS is to lose 40. The expectation was to lose 48 cents per share. Rite Aid's been around a long time. They lost 41 cents, surprised by 15% or so. And we got Darden Restaurants, Accenture came in line on their earnings and revenue. We're expecting Nike after the close. We're expecting Costco after the close. Costco, $61.3 billion in expected revenue for last quarter. I think I contributed about $1 billion of that, the amount of stuff that I buy from Costco, or my family does. But so earnings are coming into play a little bit. We're likely to see cautions or warnings or adjustments in outlook in earnings, things like that. Those things remain unresolved. The biggest piece is the U.S. fiscal deadlock. The Democrats in Congress and in the Senate are having some heated discussion and disagreement on how money should be spent, the fiscal policy for the next year. And we have this deadline of September 30th for funding the government, and the market is going to be watching that. Again, the U.S. indices are higher. The S&P is up 16 points, NASDAQ 22, Dow up 198, Russell 14.3 higher, and the Euro stocks and the DAX, which have been having some pretty big days up, all of those are higher. Again, risk on. Money flows out of the security assets, safer assets, the 10-year U.S. note, the 30-year bond, and the Euro bond are all lower. And then we're looking at metals also falling. The crude oil has been, we had the crude oil inventory release yesterday. Crude climbed kind of stair-step sideways after that release, and then this morning it made a higher high, and it's holding steady. It's holding on to this $70 handle. Looking at what's ahead for today, we did get some numbers this morning, some decent-sized numbers this morning, I should say. We got a bunch of market manufacturing numbers out of Germany and France. We got the Eurozone market manufacturing. Also out of Great Britain, the initial claims number came in a lot higher than expected, 351,000 versus consensus of 320,000. Higher is worse, meaning more people filing for initial unemployment claims. And then we're looking ahead at the market manufacturing PMI flash for September in the U.S. At 945, market services and composite as well. And then from there, we go into the evening with Great Britain's consumer confidence, GfK consumer confidence, and the inflation numbers out of Japan. The inflation in Japan, which has been in a deflationary cycle for a long time, 30 years, the prior inflation rate was negative 0.3%. The forecast is negative 0.1. Japan just keeps printing money, and it's not helping at all. Kind of a tough situation there. In terms of the ES, we're looking at a multi-distribution profile overnight. 271,000 contracts have traded, and 100% of the inventory overnight occurred, or the volume overnight occurred above yesterday's settlement. So 100% of trading occurred above settlement. So we say that the market inventory is long. The range, although coming in somewhat, is still higher than what we would call normal, which is one standard deviation over 252 days. That's a statistical number. We've got 39. The one standard deviation limit is 37. That's why it's blue on the sheet in front of you. And then this morning we pushed as high as 44.24. And if you recall, 44.16 quarter was the low last week. And then we had a big gap down. We had a relatively large gap down on Monday. And essentially we pushed through that by 8 points in the overnight session. So we have really made quite a comeback from 42.90. What was it? 42.98 or 42.93 to 44.24 in the last 2 days. This is quite the rally here. But again, we're pushing against some relatively tough areas that we're coming up on. There's quite a bit more. There's quite a bit more ahead. So that's the whole picture. Remember, the rotations are still higher. Don't forget to look at these on Mondays when you come in. They're updated every Sunday. There are statistical numbers. Currently, the S&P is still at a 5-point harmonic rotation. In fact, this has increased this week because of the added volatility. It's closer to 6.5. The Nasdaq's closer to 24. The Russell is 5.4 points. That's one rotation. That's the expected rotation on, or what we would call a normal rotation on a 1-minute chart from swing high to swing low. This is what this is telling us, and we use that to size our trades and gauge the amount of risk and stop we have to use in order to not get into the noise. In other words, trading this environment with a 1.5 point stop or six tick stop or whatever, depending on your product, means you're likely to get chopped out and dramatically increase your loss percent on those trades. So that's where we are. Looking at what was expected yesterday. Yesterday I was looking for a pullback to the 55. Outlined right here, the 55 area. I was looking for a pullback to 55. Remember, I was looking for the market to be responsive right from the get-go. Look back, pull back into 55, and then I was looking for a push into 83, 85, potentially 92, but expected it to push higher, but also do so before the FOMC. So I expected it to get to have a relatively strong rally, and I'm being conservative at 83, 85, but that's That's 30 points. 30 points from the low, 55 to 85. That's 30 points already before the FOMC. And I said the FOMC, anybody's guess, but we expect them to appease the market and tell the market what it wants to hear. And here's what we've got. So this is our review segment. It's a busy chart. By the way, I love seeing a chart, a 4-tick Renko that fills the screen. It's my favorite thing. It tells me that there are many, many rotations. Very important. There are many rotations and therefore many opportunities to win and lose, just to make sure we're being balanced, to win and lose. We open up and we put in an opening swing immediately. We're choppy, and then we pull back to where? We pull back to the 56.50 ahead of our 55. So we missed our 55 by 6 ticks, unfortunately, but still, it was a pretty decent read. The push up out of the 55 area, 56.50, small pullback, and then we get this explosion higher. Did not catch that push up. In fact, yesterday I wrote in the Convergent Trading Head Trader channel that I'm not on my game this morning. I did wake up yesterday at around 3:15 a.m. here in Chicago and was exhausted by the time the market had opened. So it's wise for me on those days is to admit it to myself and to just go meditate or rest or just stay calm or just watch the market and stay engaged with the market without actually engaging in the market in the form of trading. So I didn't trade most of this. Then we took out the 85. We took out the 85 and pushed through the 4,400. And then from there, we really didn't give up this zone here. We ended up just punching through back and forth into the close. We had a clear excess on the low in the profile, and we ended up building a pretty fat section of balance from about 74 all the way up to 4,400, and we just remained in that area, and that starts to create a base for a further push up. And we actually did that push in the overnight session. News came out on Evergrande and all that stuff, and the market just took it higher. This is what's happened in the overnight session. Note that as soon as it made a high here, we had a lot of delta, negative delta. As we pushed the high there, we ended up spiking. And we created what I would call a blow-off top. You can see the blow-off top pretty clearly in that as the market pushed higher to new highs up at 24.75, it found an excess. This is what an excess looks like. It looks like a market that is rallying, but then it gets spiked down very quickly. This is where this is an important concept in auctions. This is a pretty stable high right now, and it's not because the profile's got fat part and it tapers or whatever. But look at the action. It ended up pushing up to 24.75, and what happens? We get a tremendous amount of selling into that high. That's quite a bit of volume for the overnight session. It's quite a bit of volume for the overnight session. So that's an excess high. That's a relatively secure high. The expectation in the overnight session, and I want to say this clearly, the expectation from the overnight session is that that high is relatively secure, which means that the expectation is low, although it's in the cards. We can still have it happen. The market will decide. But the expectation from me is going to be relatively low that the 24.75 will be taken out during today's day session, barring news. If news comes out, the Democrats figured out their issues and boom, they're passing a budget, the Senate's signing off, it's going to the president who's definitely going to sign it. Then we get a market that rallies because we're getting that stimulus, fiscal stimulus, and then we'll have to deal with the tax consequences of that later. But overall, this is a relatively secure area above 44.20 in my opinion coming into today's session. So we pull back, and then we have a lower high, an attempt, and now we're extending lower, and the delta has gone below. Okay, and so we came right back into yesterday's range, and we're opening at the upper end of yesterday's range. It is likely to be choppy today. That's the conclusion. We're likely to be choppy coming in because we have established a relatively secure high and come back into the range. We'll see when the market opens what it does, but in general, the way this is set up, and remember I said over the last few days, I had said, look, we have these levels, we have these areas on our map, but given the posture of the market, we expect that the market to have a lot of range on the open. We expect it to push down strong or push up strong or trade sideways. There are cross currents or whatever. This morning, I'm telling you that it's likely to be relatively choppy. And with the range being at 37 so far, with volume being elevated, it may be relatively fast chop, but in general, it's likely to be a grind. So be prepared for that in your plan, and maybe sit out the first 10-15 minutes and don't make any commitments. That's what I would recommend. Follow your plan, of course. Currently, if you look at what's going on here, we have the VWAP, the full session VWAP, the full session mid, which is the blue dashed line there. It's a broken line. You have them on top of the overnight point of control. So what we've done is we have gone from an excess low. You see how it ran up when we opened. So we went from an excess low and we traded and traded and traded and traded. Okay, we went through some balance in the Asian session, but then the Europeans came in, and then we went high enough that we found sellers. And then when the sellers came in, they didn't dilly-dally. The sellers came in and they whacked this thing. And there's fairly substantial volume in doing so. In that bar, there was 18,000 contracts that got sold more than bought on the bid. They sold them on the bid more than what was lifted on the offer. So that's the delta between them. That's a substantial number, and that's what an excess looks like. And now we've gone down, so we've got a market that's run away from the low after it opened. So we have a rejected low, and we have a clear excess high. And then we've come to the middle, and we've brought the mid, the full session VWAP, and the overnight point of control at the same price. That is a market that is opening imbalance at the edge of yesterday's high, and we have the 4,400 beneath us. This is the 4,400 here, but we've got the point of control at yesterday's high. We've got VWAP and mid at that price. Chop. This is chop. We're likely to have a balanced open, so try not to commit. To a directional trade in this situation. In this situation, you're more likely to put away your trending or momentum-based trades early on and pull out your setups that are for what are called outside in or bracketing or mean reversion. Choose the name you want to call it. And that's what we're looking for today. And that's the biggest thing I'd like you to walk away from this trade bite with this morning. So that's where we stand. We've made a pretty good recovery. If we look at what we've done here, we've tackled the 55 right there. That's the 55 area. That's where that number comes from. You've got a couple of punches at this 55. Tests, retest, test, retest. We held it yesterday. We pushed through, and we held it yesterday by a few ticks, and now we're on our way to filling this gap at 16 and a quarter, and then we have a little bit of resistance just above that at 25 to 26, the overnight high at 24.75. So you can now see how I've been saying that we've got good structures, we've got good trading going on, because it's respecting, the S&P is thinner, but it's respecting levels pretty well. So I want you to really consider that in your trading. So let's take a look at what's expected for today, because I'm rambling a lot, but there's a lot to cover here, a lot to go over, and a lot of opportunity, in my opinion, in the markets. Let me set up this chart here. Give me 1 second. By the way, if you're not at EdgeClear, why not? You need a good broker and a good clearing arrangement, and somebody that advocates for you. I would love to have your support. Go to edgeclear.com and talk to one of our team. Here's what we're looking at. So, again, we're opening right on top of this 4406 stock zone, which was built off of, in fact, this stock zone has been there all along. 4406, it marked off yesterday's high. We went right into it for yesterday's high. 4406, we've got the overnight point of control, VWAP mid, as I just discussed. So we are falling below. I'm looking for an open auction in range today. I'm looking for this to make an attempt to push into the 16s. Again, close the gap. This is the gap zone right here. Close the gap, squeeze through, and then unable to get into that 24.75 back through, and then I expect us to fall through the 4,400 into 93.75, consolidate, and then eventually give us a poke at yesterday's close. So I'm looking for the internal gap to be closed here. We're opening in range, so there's a higher probability of an internal gap touch. Settlements at 84 or so, and I'm expecting it to take the overnight low, give us the overnight stat, come back here and finish somewhere in the middle for a resting day today following the FOMC yesterday. Okay. The secondary is more of the same, but we get the response lower, so we're becoming responsive. In other words, we're returning to yesterday. We're responding to the fact that we're away from yesterday's auction, and we get responsive immediately. So chop, sell early. The selling could go again into the prior settlement, prior close area of 84 even, 43.84 even, and then potentially to squeeze the point of control at 80, yesterday's point of control right here, the most traded price, to 80, stabilize and come back and likely finish lower. In either case, we're still looking at a market that is one time framing up. So we have the base day, we have one time framing up triggered. So on a daily, we have a trend that's pushing higher. And then we continued that trend yesterday, and I'm expecting it to continue it today. Pay attention though, if we slip through, we start taking out these yesterday's low, the 55 specifically, the longs are in serious trouble. But I'm not expecting that today. I'm expecting the market to give itself a break. Good luck today, and I'll catch you tomorrow morning. Take care.